Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, January 13th. Happy Friday the 13th to all of our listeners. I'm hoping that we have good luck today instead of bad luck. We've certainly had a great week. Equities will close out in several hours for their week, and then we will have crypto riding free for the weekend. Last weekend, it was more of a flat ride until Sunday, and which we rose into the week and only headed higher. So fingers crossed for that same type of price action this week. But let's go ahead and dive in to see if that is plausible or if we may be coming off of these highs sometime soon. So where we are right now is kind of my special Bitcoin setup, which we have perps on the right, spot on the left. I just restarted this, so of course all the data is coming in fresh. Actually, let me restart because I believe that I stopped my VPN, which may be why we're not seeing fresh trades come in. Let these errors run out. So what we can see here is that spot and perps have been rising to the same degree, mostly the same tide so far. We've gone over this multiple times in the sense that when spot begins to sell off much more faster than perps, or if perps are leading the rally much more heavy than spot, things will typically die out. And right now we have pretty much an even spread in terms of spot and perps to continue this rally. So until we see something different, it does look like continuation is plausible. Now, if we zoom out, we can see that perps have been much more so leading spot during the entirety of the rally. But on a relative basis, the way these things reset on both the daily perspective as well as when more volume comes into the market, such as at the U.S. Open, we're seeing them continue to ride in line. So very good for continuation, and we're obviously seeing price inch higher as we discuss this concept. So every level that you can break above and flip to support is obviously another potential momentum move higher. So in this case, 19.4 is really the number that we want to get above. And we'll go ahead and check out the more granular charts in a second to see how that flows. But right now, this is a very good sign as we head into the weekend, but of course could flip and is worth closely watching as we head into the weekend. So DXY, as we predicted yesterday, has continued lower. We closed, down near the 102 level yesterday, had a bit of a spike today. Nice little Darth Vader candle forming there. Zooming down into the 4 hour to get a bit better of a view, we can see that to me, that still looks pretty weak. No bullish divergence. It's holding at its previous daily close, but definitely looks weak. And I still think that the 101 level is still on target, likely heading into next week. And based on a bearish DXY outlook, it still seems like the bulls may have room to run on the risk asset charts, which of course are equities and crypto. So good thing to keep in mind and good thing to keep track of around that 101.2 level, which is where I would expect another catch to happen. And maybe that's where we end up coming off of the highs. Could certainly happen sooner if we end up, trying to reattack 103.5. But right now, preliminarily, things look a bit bearish for the dollar index and will likely continue at least over the next few sessions. Looking at equities, you can see what I drew for the Trade the Chain community earlier today when we were a bit lower, just kind of piping up post US Open. The key level that we really need to break here is 4K. 39.90 I think is a really good start, as this is the top of the range. We've had two deviations, slight double top there yesterday, which led us lower back to support, which we discussed would be likely. We mentioned a potential range for equities, and that's what we got. So getting above 39.90 to me sets you up, back up for the potential of a swing failure pattern, but also gives you the possibility to flip that into support and head higher. So that's why we're looking at 39.90 as kind of a key level. And once we break above 4K, you've got a lot of smooth sailing up to, 40.40 or 40.50 and all the way up to 4100, which is an equal high from early December. And then, 4150 is that equal high from back in September. So if we get up to, 4100 all the way leading up into 4200, I have a feeling things will get a little bit wonky and precarious for equities, as we do have, this is, top of September, and then we also have top of August. So plenty of room to, find a potential double top or resistance. But, of course, we are taking this level by level, as you should during any pump in a bear market. And if you can flip 39.90, you have room to head higher. And we know that 40.40, 40.50 will be first resistance, as well as 4100 if we get above there. So thinking about a potential ranging or bullish equities outlook, we have to consider the possibility of Bitcoin getting a little bit or momentum for Bitcoin slowing down around this 19.5 level. The one thing that we haven't seen is any sort of blow off top, which is typically something that you would find at this level for a bearish indicator, meaning, maybe you zoom and spike into, 20K, and you have a wick that, is a couple $100 wick, and, then sell volume starts to come in and we break this bullish trend that we've been on. So I have a feeling that this trend line will be very important, even possibly, the even steeper trend line. So these kind of trends right here, you'll be looking for a trend break to spell potential bullish momentum, or, at least a ride back down to support around 18.5 or 19K, depending on how high we go. So somebody consider there, that's a, possible signal for bearish continuation. But I would be expecting kind of that blow off top, which could come here. We could sell off back down to 19K, and then you've got, two ugly wicks, really setting you up for potential bearish continuation. It could also be a giant swing failure pattern on the 4-hour chart, where you end up just kind of selling off, and you've got a giant wick with a body, below 19K. That would not look good. But, moving away from, ultra bearish outlook, just because, we have to discuss the possibility of people losing money longing into this area. Alternatively, if you get above 19.4, like we explained, looking at the ticker tape, then you have a ride to 19.5. And if you can get above 19.5, there is room to roam all the way up to 20K. So I'm going to have to extend the chart out a bit, because we're at the point where we've had this trough for so long. Looking at the 4-hour, we can see, this is, previous trading range here, although a short one, still had some volatility there. So you're expecting a little bit of a drop off in volatility around this 19.4, 19.5 level. And of course, there is, some plausible bearish divergence. You've got RSI, halting out at around 85 and price continuing higher. So, pardon me, that could be, a quote unquote meme, because RSI can be irrelevant and very with bullish momentum, but you would expect 19.5 to kind of bring a little bit of resistance to the pump, and maybe expect Bitcoin to cool off, maybe down to 19K, maybe down to, high 18s for, either a full trend break or a catch at support to head higher. So the way that I'm looking at this now is, if you can get above 19.4, you have 19.5 to act as a trampoline higher. You can catch at support at 19K, which would, potential ranging between 19 and 19.5. Or you lose 19 and you're at 18.8. If you lose 18.8, you're at 18.5. So potential good, long scalps at these levels as price catches and maybe tags back at resistance. But right now the momentum is here, and we're obviously increasing on buy volume, throughout a 4-hour, over the past 12 hours, which is obviously a sign of momentum, as we can see here what happened with rising volume. And we've still got another hour in this chart. So, based on 4-hour volume, it should be relatively equal, unless it flips to majority sell volume and we get a sell off over the next hour. So cautiously optimistic. I wouldn't be piping, too many overzealous longs at this level, but we know our level to level area. And, I think each support level will offer good longs. But, until we see that blow off top, I think that's probably the best signal for, bearish continuation is a blow off top. If we don't get that, we'll look for a trend break to halt the bullish momentum that we've seen since last Wednesday. And of course, if this trend continues higher, then we'll look at 19.5 and 20K for signals to long, meaning 19.5, and then potentially 20K to short or start coming off of those highs if it can get above 19.5. So looking at Ethereum, very same scenario. I did tell the Trade the Chain community yesterday I would expect 1430 for things to get a little quote unquote toppy. They have so far, but obviously no confirmation of a top, no blow off high, or no blow off top, no break in bullish trend. So no real signal there yet for Ethereum, other than the fact that based on how we were looking at this gap, we knew that 1430 would act as, resistance. And then we have, some area where we traded in previously leading up to 15K, which will probably act as, maybe we don't zoom through this. Maybe we have a slow grind up. Maybe we catch its support at 1350 and then zoom higher. All of those are possible because we are at resistance now. So the moral of the story is get above 1430. You've got a trampoline up to 1500. If you cannot hold 14, if you cannot get above 1430, my apologies, you are likely to drop back down to 1350, in my opinion, or at the very least, I'd say 1380. So I'll go ahead and draw this 1380 line so you can visualize that more or less, center of the trading range, caught at 1380 before the move up to 1430. And so that'll probably act as your first level of resistance. And then if you break lower, I would call 1350 to be your next level. So we know our bullish level, 1430, and we know a bearish level, which is 1380 and 1350. Maybe we get some long action at those, and that's good potential reverse level if price action does make it down there. But given the bullish momentum, if we end up breaking below 1350, in my opinion, then you're probably starting to head back to the lows from late December and early January, which are talking, back in the 1200s. So we know our level to level. I don't think anybody in their right mind is saying long this with any sort of ferocity and weight. Things do certainly look bullish, and equities look, more positive than not. DXY looks more bearish than not. And I would say Bitcoin and Ethereum still look bullish until we see those blow off top. So I'm not going to encourage anyone to gamble large amounts of money at while we're this high in a potential cycle. But just because we are overbought, just because we are at resistance, does not mean we can't continue higher if buyers continue to step in, which buyers are continuing to step in currently. So there's your back and forth on whether to be bearish or bullish. Best way to play it, as we've been playing it since late last week and into early this week, is level by level. Wait for those trading confirmations, and then long or short based on a break in resistance or break in support. So hey, age 8, prod XNS. There's definitely more than 5 people in here. So you might have been a little bit early. Everybody has to take time to trickle in and stuff like that. So definitely please smash those likes and share the video if you find this helpful. We definitely want to help as many people as possible. And if you have any questions in the audience, please feel free to submit them. I can always go over charts or ask a micro or macro question, depending on what's needed. So tentatively, I am a bull headed into the weekend, provide equities don't sell off, but I will be waiting for triggers for potential, more longs, more scalps, more likely than not at this point in the cycle. If we can break above 19.4 and if for Bitcoin, and if we could break above 1430 for ETH, those are my magic numbers. And we do know that 20K Bitcoin, probably really good resistance, at least initially, for potential continued range or maybe a flat trading day for a day or two. And then for Ethereum is 1500, very equal to 20K for Bitcoin in terms of where I would expect potentially a blow off top, potential calm down in volatility, and at very least just resistance for the next leg if we make it above 19.4 and 1430 for ETH. So good luck, happy trading. And again, if you're not in the Trade the Chain community, all of these trade ideas go into the community first thing in the morning so that you can attack the trading day as best as possible. And of course, all of this is a recap and continuation for the next day. So if you want to get more alpha, more information, there's a 14-day free trial at www.tradethechain.com that you can get signed up for and join our community and join our data sources and trade like us. So good luck, happy trading over the weekend, and fingers crossed for more bullishness. I know we all feel like we deserve it after the last year, and I want to say many of us do. So I'm hoping everybody is able to make some money and is enjoying the euphoria while it lasts. We will, of course, go over continuation, or whatever is going to come towards the end of the month next week. We have earnings, we have FOMC, so we are not out of the woods yet, and we should all be cautious at these levels until we really confirm these support levels as something that is worth trading long term. If you recall, I guess just to give you a bit of a quick overview over what happened years ago is, I don't know, not everyone may remember this, but I hope many of you do. Bitcoin, we don't want that. Bitcoin back in 2019 had a famous rally from right around 3K all the way up to close to 14K. And that was a 330% rally that lasted for many months and nearly half a year. So, and I guess, just kind of put it in context, from those lows, up 50% to kind of where the first level where it was ranging for better part of a month. And if we compare that back to where we are now, we are from the lows only up 17%. So, it's worth mentioning, in the last bear market near lows, we rose 300%. Now there was other bear market rallies in between there. Let's get back to that level. There were other rallies in between there, dating back here. So could we be at this level? Yeah, that was still a 30% rise. Could we be here? Certainly, that was only a 20% rise. But from those lows, which I will say, after a big steep drop off and a lot of ranging, which we've done, it went up 50% and then only rose from there over the next 6 months before, dropping back down to, and let's kind of reverse this, before dropping down another 70% over the next, what was that? So June to March, over the next 9 months. And just over the next 6 months was a 50% drop. So, based on precedent, we do not have to stop here. We are just using our technical knowledge and prowess to understand where we are at in the broader bear market cycle, which is not an exact science, which is why it's best to take this level by level and understand what we want to see for confirmation for breaks higher and breaks lower to invest and trade with our money. So, again, this is why I'm cautiously optimistic, but at the end of the day, how many fake outs have we seen? This is certainly a different market than 2019, and anything is possible on any given day, especially heading into a weekend where we're expecting low volume. So wait for those confirmations. I know it can get tough to wait to place a trade in this market, but I will tell you something. Keeping your money is certainly better than losing your money. Although making money is the grander prize, keeping your money is always better than losing your money. So, and yes, Sci-Flyer, Litecoin, something that we mentioned in the Trade the Chain newsletter last week, and sent around again, is that, we definitely are expecting Litecoin to outperform, provided the rest of the crypto market actually performs. And Litecoin does have a halving that is coming up, or halvening, whatever you want to call it, is coming up pretty soon. I want to say it's within the next half year, maybe next 3-4 months. So, Litecoin should certainly be something on everybody's radar as a high beta altcoin, especially compared to Bitcoin. So I'll leave it there. We're a little bit over our time, but good luck, happy trading, and speak to everybody next week. If you want to get a hold of me, tag me on Twitter at TraderNMX, or hop in the Trade the Chain community and tag me and ask any questions there. So see everybody on Monday. Let's hope for a green weekend.